Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture with me, Ryan Huang. And we are looking at the Singapore stock market, where Singapore has recently announced a set of measures to rejuvenate its equities market, including a 20% tax rebate for primary listings and a $5 billion program that focuses on investing in domestic stocks, all in the name of reviving the stock market that's come under pressure from a dearth of mega listings and softer trading liquidity. And to help us unpack and analyze some of these measures, we've got Carmen Lee. She is the head of OCBC Investment Research. Carmen, good morning. How are you doing today?
Great. Good morning to everyone.
I suppose exciting times for the local stock market because we now have some moves to hopefully revive and bring back some of the mojo. What's your sense or reaction from the industry that you've seen so far? Has it been a surprise so far?
Okay, I think this is really a long overdue move to actually address quite a lot of the critical issue which you also highlighted earlier on about the fact that there's actually a lack of quality or big cap stocks listing, as well as also the lack of trading liquidity in the market. But again, this is to be expected because the US has actually been one of the key markets, and that has actually diverted a lot of the interest away from Singapore and also some of the regional market as well. But I guess having said that, and most market participants have been eagerly waiting for this whole set of measures for several months now. So when it first came out, I think the response was somewhat muted because there was really no details, right? But last Friday, when the details came out, and that's when I guess we get more concrete measures that were announced, and I think the market reacted quite well on Monday, especially for the stock SGX itself, to reflect some of this measure. For me, I think one of the most important measures is, of course, the $5 billion program, and that will be used to invest in Singapore-listed equities. And I think this will be also one of those key impetus that will also help to spark some of the interest in Singapore-listed companies as well.
All right, help us to put some context into this. How groundbreaking is this when you talk about the $5 billion program to invest in the local stock market? How much will it do when you look at some of the potential upside?
I think to put it all in perspective, because $5 billion is, is it too much? Is it too little? I think if you look at it basically as part of the whole market cap of the Singapore market, then it's not that significant. It's very less than 1% market cap of the current market capitalization of the whole Singapore market. But having said that, if you take a look at the fund management industry and you look at like Singapore-focused sort of funds, it's about close to 20 billion. So if you're going to put 5 billion into a really currently 20 billion market, it's actually quite significant, right? 5 out of 20, that's quite significant. But again, I think ideally, while this sounds quite interesting, I think I kind of, on my wish list is the fact that, maybe perhaps they could have actually sort of greater focus on some of the small mid-cap companies, because if you take a look at the broader market on a daily basis, actually the top most actively traded stocks in terms of value are actually the big cap or the STI 30 stocks, right? Then apart from that, then you have a lot of the small mid-cap which form the bulk of the whole Singapore market, and those tend to be, in a sense, neglected. And if only we can have a little bit more targeted approach towards trying to increase interest in this segment of the market, I think that would be a much better approach to actually increase both the width and the depth of the market.
Yeah, that's a great point, right? So not just focusing on the big stocks, try to calibrate some of the investment flow towards some of the stocks with smaller market caps. And I suppose the other part of the equation is, even though you have additional liquidity, will you see additional interest from retail investors? How much or what else needs to be done to drum up interest from the retail side?
I think what happens now is obviously the fact that we're trying to look at both the demand and the supply side of the situation. But I think there are also other measures that we can look at, because I think especially for the more small mid-cap companies, currently there's really very little in terms of investor education or even roadshows or even accessibility to listed company, corporates and senior management. And again, then how then do you bring this information to the general public? I think traditionally it's always been via research reports, but I guess the world has changed so much. So we're all deploying a lot of social media like TikTok, YouTube, etc., etc. So I think that there's also the need to perhaps put some of this content onto a more accessible platform for the digital savvy investor as well, so that over time this will actually increase the awareness or even interest in some of these small mid-cap companies, because the bigger cap companies, I believe, are very well and widely covered.
Yeah, so you have a lot to, I suppose, explore when it comes to drumming up interest in the local stock market. The MAS has also talked about expanding the research development grant scheme under its Grant for Equity Market Singapore, so that you get more perhaps brokerage reports, more analyst reports as well, so people can figure out what they might be interested to trade on. How do you, as a research team, decide what to cover and, I suppose, balance with what the market wants?
Yeah, I think if you look at the GEM scheme, whereby actually the government kind of co-fund for the research resources, currently the focus is very much on the small mid-cap. So if any company signs on to that program, you largely will be assigned some small mid-cap companies to cover. But I think under the new measure, what is interesting is the fact that now they're going to allow more research houses to actually participate in this scheme, which means that from the current pool now, most likely more companies will actually look to try to put this as part of their business, and which effectively means that there could possibly be more companies wanting to do research coverage on some of the small mid-cap companies. The other measure that they announced is actually the fact that they're going to allow us to do pre-IPO coverage as well. So usually in the past, when the IPO hits the market, that's the first time you've ever heard of the company. So these days we're allowed to, with the new measures, then you can go forward, you can actually do some pre-IPO sort of coverage on this company. Again, that will also help to increase the awareness for some of these companies. Otherwise, by the time they get listed, it's usually most investors are quite unaware of what is the stock all about, right? So I think that some of these measures are really seriously quite fairly long term, medium to longer term. Immediate impact maybe not so significant, but over time, I think this carry out successfully. I believe that then more companies will cover stocks, and then obviously then that will mean that investor interest in these stocks will hopefully grow with time as well.
Yeah, we also have been seeing quite a few movements when it comes to the spate of the listings recently, and also local companies opting overseas exchanges as well. What sort of headwinds and challenges do we still need to address in order to mitigate or at least address some of these concerns right now?
Yeah, so far, if you look at the list of companies that have actually delisted, I would classify them mostly as small cap companies. And when you're a small cap company, and if you have to encounter the lack of trading liquidity in your stocks, and of course key shareholders or even founders actually usually hold a larger stake in these companies, then there's really very little incentive to actually continue to be listed, because staying listed means that you have to put aside resources to also maintain the listing requirements and also observe some of the listing processes as well. And together with the fact that once it's not well traded, then it also means that your valuation tends to be a bit lower. And so sometimes certain companies will feel that perhaps it's better to be delisted. So fortunately, I think in the last couple of years, we saw quite a fair bit of delisting, but I would still think that it's largely more in the small mid-cap space. But having said that, we do not want more delisting, and I think that one of the way, of course, is to also increase trading liquidity, and also so that valuation can go up over time. Because if your valuations are much lower than what you think your company is worth, then it doesn't make sense to stay listed. Or if there's really no need for you to raise funds, then it doesn't make sense for you to stay listed as well. So some of these issues have to be looked into.
Yeah, I also wonder what sort of a form SGX needs to transform itself into in order to make it more appealing. Does it need to pick its battles in that sense? Does it need to recognize that it needs to introduce more exciting products? Or should it recognize that it can't compete in what, for example, the NASDAQ is offering when it comes to sexy technology growth companies, and instead focus on some of its strengths like the REITs?
Yep. I think you're right on that front. I think we pick our battles, and I think Singapore has established itself quite strongly in the REIT space, and also in the banks and some of these high-yielding dividend and defensive account counters. Even within the very well-established REIT sector, where Singapore is actually among the best market for it in this region, I think more can still be done to attract even more listings, because I think we can have even more segmentation. We can go into like data center, we can attract more hospitality groups from the region to get listed here. We can even attract some of this overseas retail as well as industrial asset owners to say, hey, come to Singapore and get listed, because already there is a steady pool of companies, and that's when you can get much better valuation and even for comparison purposes. So while we have quite a lot of the REITs listed here, but large portion of it is still very much Singapore-based companies. So it will be good if we can actually really widen this scope and attract a lot more of the companies to come to be listed here, largely because of the fact that we already have the sizable number of listings. Even in the financial sector, where we have got some of the biggest banks in this region, I think it's also largely very much bank-focused. There are a lot of financial intermediaries, digital banks, and are coming to the market. And all these are really finance-related sectors and companies. And I think if you can really put in more of this into the local market, and then that will have a very much more vibrant financial sector. So if we can just speak out better, I think still concentrate on what we have already and leverage on that and build even more or attract even more companies to come and be listed here. And it doesn't have to be primary listing, because now they are making it so much easier. Even if it's a secondary listing, they are streamlining the processes so that even if they're seeking a secondary listing, it's not going to be as daunting as before. So that should hopefully help to open up the path for more companies to even get a secondary listing here in the Singapore market.
Okay, one step in the right direction for now. We've been in conversation with Carmen Lee. She is the head of OCBC Investment Research, helping us unpack some of the latest measures from the MAS to revive the local stock market. Carmen, thanks for your time this morning.
Thank you.
All right, catch up again soon, Carmen. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.